All right, welcome everybody. It is time for a little stock and option webinar business. See what the stocks are doing, see what the options are doing, see what everything is kind of doing. Let's see what my predictions are. Let's see what is going on. I have some thoughts. I have some things to say, some thoughts to share. Keep in mind that it's also Thursday evening, and essentially, most of my trading is done for the week, and that's a good thing. So I'm ready to. This week it's felt like a whole week long this week, which is really strange. So, yeah, welcome, Clifford. Glad you made it in. Dan, I read that if you watch the futures market, it is a reflection of what can see where the stock market is headed. Is this true? If so, what is the best way to view the futures market? It's a good question. It's a very good question. Let's dive right into that. So if you do want to watch the futures market, now sometimes it doesn't do a whole lot of good, right? You could watch the futures markets and kind of see where things are headed. If they're way up, way down, and you're stuck in a position, there's still not much you can do right until the market opens. Some brokers and some stocks and so on will, you have some pre-market and post-market trading hours, but if futures are way down overnight, for example, and you have a bullish trade on, still going to have to basically wait till they open to get out of that position. But yes, the futures market is a good thing to watch, and of course we want to keep an eye on that. So what I typically will look for is just, if you type in on TradingView, ES, right? It's going to bring up a whole bunch of things. Eversource Energy, oh, interesting. Esso, right? This is our the gas stations. You guys all been to Europe? Esso's got their big gas station there. You can buy Gruyere cheese at the gas station. But typically, I'll just look at the E-mini futures, right? S&P futures. That's pretty much what I watch. There's all kinds of futures you can watch, but S&P futures are pretty good. So if you just go to ES, and I'll just look at either, the current contract or, the second contract there. Either one of those is pretty good. But I'll look at the current contract on futures. So the actual symbol, as you can see there, is ES1 exclamation mark. Very, very intense. But these are running 24 hours a day. You can watch this just constantly and see everything. Everything's moving right now. So, if we got a big surge in futures, you might expect something similar to be happening with the S&P at the open tomorrow. So ES, and then just select that current contract, that front contract, and you're in business. Does that answer your question? Is that a good one for you there, Dan? So that's a good way to do that. So speaking of the S&P and speaking of SPY and some of these other things, remember, guys, we talked last week about where the SPY was headed, what we wanted to kind of see happen. And remember, we said, okay, any kind of movement below about 300 is going to be telling, and any movement above kind of the low 320s is going to be telling. And what did this darn thing do? We got some lows right there of about 296, 297, somewhere right in there. We're still way off these these highs here. So I could just really see this S&P and SPY kind of channeling here, right? Just kind of giving us some of that movement for a little while, but I'm starting to just wonder if there's some bearish movement coming. Just starting to wonder. Not a lot of bearish movement, and I don't really want to be bearish this market. The Fed just keep coming with one thing after another. What was the latest big Fed announcement? You guys remember that? That was maybe Tuesday or something along those lines. You guys remember what the Fed said? My good buddy Jerome Powell. He said the Fed's going to start buying corporate debt. Corporate debt. Does anybody know what corporate debt is? Bond buying? So they've been bond buying. They've been buying bonds for a long time, but now they're going to buy corporate bonds. So when a company wants to issue a bond and do some debt fundraising, right? Here's a bond. We'll pay some interest. Loan us some money, right? And typically the corporate bond market you know, it's divided up into its various categories: investor grade, investment grade, you know, higher risk, so on. But the Fed's going to start buying these things now, and they're going to buy B-rated, triple B-rated bonds, which is not amazing. So they're not even buying investment grade bonds. They're buying, you know, lower grade bonds, which I guess is probably the ones that they, you know, that need to be purchased. I don't think Microsoft is hurting so much for money, you know, and of course they're going to be high rated, Apple and so on. So, you know, they're trying to help out the kind of the mid to, you know, pretty large companies, but with a slightly lower credit rating. So anyways, the government is buying corporate bonds. That's the first time in the history of, wait for it, ever. So it's pretty tough to be bearish in a market like this. And so that's why I'm cautiously bearish. And I'm only bearish because I'm starting to see things kind of getting a little overextended, right? They're just getting a little bit extended, just a little bit up there. And I'm just thinking, I'm not long-term bearish. I'm not big-time bearish. I'm just thinking a little tiny bit of a correction might be coming. But basically, I think anything that happens, we just need to be looking for, you know, bullishness as the market kind of continues to roll along and do its thing. Being bullish, staying bullish is probably just our safest bet. But we need to be looking for some of these opportunities where certain stocks and certain situations have just gotten a little bit on a little bit on the overextended side. So so that's what I'm looking for. What do you guys think? What's everyone's outlook on the market? Are you guys cautiously bullish, cautiously bearish, neutral? You can't be neutral. That's too easy. We got to take a side here. So what are you guys thinking? Do we have lots more upside potential? What's everybody thinking? How's everyone feel about the stock market in general? There we go. All right. So, guess based on my current trades. There you go. Bullish. All right. Dom, you're leaning on the bearish side. I think that's reasonable. And Waylon, good to see you. Do I sell my puts? Depends on what stock they're on. And Lenny, let's see here. It keeps going up even though it feels like it's overextended. Sure does, man. It just keeps heading straight higher. Clifford, I think the stock market is bullish due to COVID-19 affecting everything. Yep. We've been thinking bearish for several weeks, but the market keeps going up. That's a good point, Janae. Good point. So I'll tell you. Oh, you know what? I didn't even look at. Interesting. I'll look at Kroger. What do we have here on old the Krog? They're down a little bit today. They're down a little bit. So what I think we need to be looking for is just some of these stocks that have made some pretty aggressive runs. Now, I've probably been asked since the webinar last week. I've probably been asked by maybe 40 or 50 people so far in either an email, a message, a Skype message, you know, any of the above. A little bit about what I talked about last week with what the SPY did and what Apple did and so on, or excuse me, and I showed the example of Apple, and I kind of think I kind of think that we have a situation in the works where a lot of these stocks are starting to get a little bit on the overcooked side, right? So we talked about SPY, and I shared my, you know, kind of my methodology that I look at, right? Where I go to lower time frames and I just kind of look for a couple of things. I look for patterns, I look for targets, and I look, you know, I specifically watch this 200 moving average, and I look for these kinds of things, and I say, okay, with this kind of stuff here, I'm going to be looking for, whoops, hold on here. I was looking for on SPY and some of these others, you know, opportunities for some of these in the short term to just get kind of overextended, right? We have some of these really strong rallies, and then we start to see things starting to work their way lower from there. So S&P, SPY had this move up right here on a short-term time frame where it went for basically on a short-term time frame, basically went a solid month without touching the 200 moving average. And moving averages are great tools to use to find overextended and overcooked markets, right? When you go over here, and it's kind of hard, you say, well, how far does it need to be away, and all these kinds of things, right, which are kind of tricky. And moving averages are really great, right? We saw the market. I'm just going to move this guy for a second here, so we don't have to look at that. We saw the SPY over here, you know, in the end of 2019, it just started going up and up and up and up and up until it peaked in February of this year, and then it dropped like crazy, right? And what we ended up with is a lot of time and a lot of distance that this thing hadn't touched longer term moving averages, right? It just kept getting further away, and it just kept getting you know, more and more space. So this is a slow moving average. This is a longer term moving average. But we got pretty far, right? This got pretty far without touching. And it even got pretty far without even coming back and hitting that 50-day moving average, which is fairly short term. So these are signals that things are getting a little overextended, and I use these on smaller time frames and larger time frames alike. They can give us some pretty good signals. So that's what we saw in this short time frame with SPY, is that this had run for a whole month on a 15-minute chart without touching the 200 moving average. And I thought, man, that's getting to a tricky spot. We started to see some resistance up here, and whammo, this thing makes a run from, you know, the 320s all the way down to 297. Now we can say, well, that's because of all these reasons. Well, who cares? All these reasons we don't even know, really. So we look at this, we say, okay, there's signals that something, and moving averages are one of my favorites. People say, well, if the moving average is moving up, the stock should be moving up. Yeah, well, that's relative, but what I really like to look at is if a stock is moving higher for a long period of time or moving lower for a long period of time, we start to see that it's going for weeks and weeks and months without touching a moving average. I get very cautious about trading the trend in that case. And I get very interested about trading reversals in that case. Now, I'll talk about a strategy that I think can be used here, but that's the kind of thing that we look at. When we see weeks and months of not touching the 200 moving average on a 15-minute chart, on a 30-minute chart, on an hourly chart, on a daily chart, any time frame really, that is a signal of short, medium, and long-term overextended charts, right? SPY went about a month, right? It touched the moving average here in May 20th, and it blasted back about 3 weeks, about June 11th, you know, right around there, it blasted back and hit that moving average 10th, 11th, 12th right there. So it went a couple of weeks on this short-term time frame. So that gets us very cautious about being bullish and very interested in being bearish. And it breaks this trend line, breaks this pattern, and, you know, there's a nice little trade to be had there. So let's look at a couple of other examples, and I'll show you a strategy that we can use for this. So we talked about Apple last week, right? And we had this similar kind of situation, except Apple's happening on the 30-minute chart. Now, Apple is not a stock that I want to trade against. I don't like trading against Apple because for whatever reason, these guys cannot stop going higher. They just can't stop going higher. Apple is a stock that apparently wants to just break every record in the world about, you know, the stock that's run up the most. Does everybody here have an iPhone? Everyone have an iPhone here? Anyone not have an iPhone here? I recently moved over to an iPhone from an Android, and I feel like the Android user experience is 10 times better. I don't know why everyone's so into iPhones. I have an iPhone now, and I have a Mac. I'm on a Mac and an iPhone. You know, I mean, that's just testament enough. I don't like Macs, and I don't like iPhones, and I have a Mac, and I use an iPhone. So what does that tell you about Apple stock, right? Even people that don't like their products still use their products. Apple's kind of like the government, you know, like they're going to get money from you one way or another, whether you like it or not, you know, and here we are. So, okay, no iPhone for you. And it is a sticky business. Yeah, they do make some good anchors, that's for sure. Mel, not an iPhone user. I got you. Clifford, not. Okay, look, geez. Okay, Dom, working on a Mac. Yeah, Dom, I'm in the same boat with you. Working on a Mac, using an iPhone. So it's, you know, it's a funny situation, and I don't like to I don't like to trade. I don't like to buck the trend too much, but that's right. Google does spy on you with their phones. Here's the thing, though. iPhone has got a spy too, and you know, Google has all my information anyway. They just are spying away. And maybe Apple doesn't spy on you, but certainly all the apps in Apple spy on you, right? Facebook, for example, I swear this happens way more often than not. I will be talking about something, and then I look at Facebook, and there is an ad about the thing that I was talking about that I've never done a search on, by the way. I've just mentioned it. And within an hour or a half an hour or a few minutes, it's showing up in Facebook feeds and Twitter and all this stuff. So it's shady business. They have all of our information. There's nowhere to hide. Oh yeah, Facebook. Yeah, Facebook and Google. I'm sure they have contests of who can steal more information from people. And I don't know who's winning, to be honest. Yeah, Mel, where do we have to hide? Nowhere. We have nowhere to hide. But back to the topic at hand here. Apple has made this massive comeback, right? It made this massive comeback. Now remember, what is the stock market trying to do, right? What is the stock market telling us? Telling us one of two things, right? It's always telling us, number one, there is confidence in the market, in the situation in general, right? There's confidence. And so that's why the stock market goes up. A company doesn't really have to be making money for their stock to go higher. Tesla's a prime example, and every other startup that goes along with it, right? Stock doesn't have to be going up. It just has to be, there is some amount of confidence in there. Now that goes along with, and sometimes replaces, or this sometimes replaces that, which is possibility of future profits, right? These are the two things that drive the stock market. Is there confidence in the market, and is there a possibility of future profits, right? So, you know, when Apple takes a big dip because of coronavirus, yeah, everyone's freaked out, everyone's panicked. But is there a possibility of future profits? Of course. Literally, the world has an iPhone and or a Mac. I don't know, Macs aren't quite as popular, but I actually like Macs, but I don't like iPhones. But I have both. But you know, does Apple have a chance of future profits? Of course they do. Absolutely, in a huge way. Another great example, probably one of my favorite examples, is Disney, right? Look at Disney. These guys took a big hit thanks to Corona Town. They take a big hit, right? Disney stock's kind of trading around 145-ish area, and it drops all the way down here to, you know, 80 bucks. But then Disney pulls all the way back up into the high 120s, mid to high 120s. And all the while, all through here, Disney's saying, well, we're not going to release our movies. So we've got all this money, hundreds and hundreds of millions of dollars tied up in these movies that we've produced and made, that now we can't get money back on our investment for a while, right? I mean, they'll still release movies, but they're going to be 6 months, you know, probably delayed by a year in total. Oh yeah, and we're closing all of our parks, and we're going to still pay people as long as we can. Oh, never mind, we're going to lay off people, 100,000 people, kind of right through this area here. All the while, Disney's stock just goes straight up, right? Disney's whole entire model is based on crowds and getting people together, which is very nice of them, by the way. Let's get everyone together. Let's have a good time. That's their whole entire business model. But while that whole business model is completely getting torn to shreds, the stock is going straight up. And people are saying, well, it's because Disney Plus, you know, Disney Plus. Okay, so they've lost 90% of their profits, but they still have Disney Plus. Well, nobody cares about Disney Plus, right? I have Disney Plus because it's like the price of, you know, of a 7-Eleven Big Gulp every month. So why the heck not have it, right? But it's future profits, right? There's no confidence in the market or anybody else, but of course Disney has got a massive potential for future profits, right? So that's why these markets have been going up. There's nothing but potential for future profits. And these things like coronavirus and all these other sell-offs are just giving us opportunities to, you know, dive into some of these stocks at lower prices. But that does not change the fact that these stocks, even though there's lots of potential future profits and all this stuff, that they don't get overextended, that they don't get a little bit overbought, right? I'm not worried about the economy at this point. I don't care, not that I don't care. I don't think it's going to be a big deal on the market that everyone's going to come off unemployment at the end of July or whenever that's going to happen, and they're going to all be unemployed and everything's going to be happening. That's not going to affect the market. That's not going to affect the market. As long as there's an ounce of confidence and potential for future profits, these stocks are going to head higher. But at the same time, they can't just go up forever. And corrections need to happen. And that's where these kinds of things come into play. Okay, you guys have some comments. Let me go back and look at it here. Apple was originally a brilliant one button. Oh yeah, that's right. That one button mouse they had, perfect for management and time. Oh yeah, that was great. I love that. The one button mouse, that's great. What are the green and purple lines that are displayed? Those are pivot points. Pivot points. So if you want to add those, I'll tell you a little bit about those, but you can just go to your indicators button here and you can type in pivot. And this is just standard pivot points. I've customized them. I've done a few little things here and there, but those are pivot points. And those basically give us a daily, weekly, and monthly average of a price. So a pivot point comes from the high, low, and close of the previous period. So we say the high is such and such, the low is such and such, and it closed that period at such and such. Add those all together, divide them by 3. That gives us kind of a general average area for that previous month, that previous week, that previous day. And it's very good at helping us identify when markets become overbought or oversold. Okay, so that's what those are. Yes, good. Mel, I think the parks are opening again. Is that there? Yeah, yes, Disney Plus is a streaming service. And I think, yeah, I know Disney World, they might be open already, or I know I know a few people that have had trips planned for like July, and Disney has confirmed that they'll be open in July. Everyone just has to get their temperature taken every 10 minutes, and you gotta wear a mask and gloves and a hazmat suit. But I think it should be fine. Hallmark is priceless. Where was I? I was in a doctor's office waiting room like a week ago, and Hallmark was on. Those shows are just amazing. They're amazing. Yeah, mid-July opening. Okay, Dom, there you go. There you go. How have sports bettors affected option trading, Robinhood and everything? I don't know. It's a good question. How have they affected? I mean, options, Robinhood has been all over the news for everything. People making tons of money, people losing tons of money. They even had a suicide from some kid that lost, had a bunch of leverage and lost $1 million from a $10,000 account, owes them $1 million. Sad stuff, craziness. Robinhood's been all over the place. They're in the news everywhere. But yeah, I don't know how the sports bettors have impacted the options market. But going back to looking at these charts and looking at these kinds of details, Apple may just continue higher and higher and higher. Apple could head to $599 in the next 3 weeks. But at this point, you won't catch me anywhere near an Apple bullish trade until we get some pullback. Apple needs to get back down to the lower 300s before I'm going to say, all right, I'm ready to jump in on some of this. Because as you were asking, Lenny, these lower levels right here, that's a monthly average level. That's another monthly average level. And Apple has just ripped past those guys. You can see all these other average levels, right? They've been hit. Candlesticks are always touching these other average levels. And we've got 2 monthly pivot points right here that are saying this is getting a little overextended. We've got a 30-minute chart, and this hasn't touched a moving average since April 22nd. This is 2 solid months of not touching that moving average. Apple, to me, feels a little bit overextended. They could keep going. They could definitely keep going, but I think Apple could be very short-term, ready for a little bit of a pullback. Just a little one. I'm not bearish Apple, and I don't think Apple's headed to 0 or to back down to 250 or whatever, but I could see Apple getting into the lower 300s before continuing higher. Nice little short-term double top right here. I mean, I look at this whole thing and I think, good heavens, that's got to be ready for a little bit of a move. And so I look at that kind of stuff, and that's where I'm starting to get a little bit interested, a little bit cautious, a little bit curious about some of these movements and how these guys have been going. Mel, yeah, they probably are ready to split. I remember, 6 or 7 years ago, Apple stock was at $700, and they did a big split, and they were all of a sudden down at, $90 or whatever. Yeah, it's an expensive stock. It is indeed. They just keep on going up. Dan, so with Disney, it looks like the stock price is around the 200 moving average. So would you think that Disney isn't overextended? Yeah, Dom. Yep, 7 to 1. That's probably that looks right. Dan, yeah. So Disney, not every stock is kind of in this same situation as Apple, right? Disney's kind of made a little bit more of a steady run, right? They ran up and just consolidated for a while. Ran up, consolidated. This is a very sustained kind of movement, right? We don't have any of these average pivot point levels on hit. We don't have any of that stuff. This is a pretty average kind of movement. It's, I wouldn't say it's rocketed up, right? Like Apple has. If we're talking just, percents and so on, I haven't even looked at this, but the very lowest point for Disney to the very highest point of Disney is a 60% move. That's pretty massive. What's Apple done from its lowest, coronavirus sell-off move to its highest move? It is up only 67%. So, same kind of situation, but Apple has had a much more aggressive straight up move here, whereas Disney's been much more sustainable, and that's the whole goal, right? Does the stock have enough time to consolidate, enough time to make a steady move in one direction or another? And Apple is a good example of this, where it's just it's really gone up aggressively, and we can see that by the lack of these pullbacks to some of these pivot point levels and some of these moving average levels and so on. So yeah, I'm starting to think, again, not bearish Apple, but I think a correction could be coming. Short correction. It might be what we saw in the S&P, right? Where S&P dropped for a day, and then it had a little bit of carryover for a day or so after that. I mean, the stock's not going to go up forever, and it's not going to go down forever. They can go down forever until they get to zero, but, Apple can't go up forever. They're going to need to make a little bit of a pullback, and so I'm looking for something like this to happen. So what I would like to do with something like Apple is I think it would be a safe bet to maybe trade a call spread on these guys. Now, I want to get a little more confirmation. We've got, there's a good call spread that could be done at this double top. I think that's a reasonable area. Take some limited risk. If it keeps pushing higher above that double top, you can close out that call spread with a pretty minimal loss, right? So there's that side of things, double top, nice extended levels. So maybe I sell a, I always like to kind of keep that risk dollar amount low. So I like, maybe selling a 350 call option and maybe buy a 350, 250, right? And see if you can get that a little bit better than 1-to-1. Maybe you can make $175 and risk $75, something like that, right? I think that's a decent play and a decent thought and idea. If Apple just keeps continuing higher, I probably won't get bullish above 355. Because again, this is just too extended for me, and I got to see this thing make a little bit of a dip before I want to start buying into Apple. So you could trade a credit spread here, a bearish call spread. I would never sell a naked call right here. We talked about selling naked puts, just sell a put last week, and how we can use that to get a signed stock, and that's great. I would never sell a naked call here because I think that that's too much risk, right? This stock could potentially head up forever, and if it does, we don't want to be on the hook with a naked call option and just be going nuts, right? And likewise, I don't want to buy a put here either, because this might be just consolidation. This might be a slow little grind lower before it continues rocketing higher. So I like a bearish call spread on Apple with these kinds of thoughts and parameters in mind. This is one of the reasons I like this. This is one of the things I think that has potential. Take limited risk. Risk $50. Risk $100 on this trade. If it keeps going higher and we keep having that moving average that's not getting touched, then I'm going to look for confirmation at a higher price to get bearish on Apple. It's just what I'm going to do. It's just what I'm going to do, darn it. And you can't stop me. But I think that's a good option, and I think that's a good play. We were looking at Apple over here and saying, okay, what are these guys up to? Double top coming, blasted through that double top. Now we have another double top, and they just keep getting further and further extended. You can see on this daily chart, we're a long ways away from that 200 moving average. That is way down there. And we're even a pretty long distance from the 50 moving average. That's even a long ways down there. So even the almighty Apple needs to have a little bit of market rebalancing, and we're sure the heck not seeing much of that happen right now. So I like that. The more I talk about that, the more I look at that, the more I think about that, the more I think Apple with enough time could be a pretty good bearish trade. If we give Apple 30 days with a 350 call, 355 call, somewhere in there, sell that call and go bearish, I like that. I like that a lot. Yeah, it's a good trade for the class. That's right. That's right. And there's a few others. We can look at some of these guys right here, and these stocks are all stocks that can just go up forever, right? I didn't even look at this one. What do we have on the Qs? I can't remember. Did I look at this here? Tech stocks have been going up like crazy. We've got the Qs. It's been going hourly chart, 200 moving average, hasn't touched since April 6th. Right? 2.5 months almost of this one not pulling back enough to touch moving average. Now, tech stocks have been going up just like crazy, right? But I look at that and I think, there's on a medium time frame, there's a little bit of a pullback. We hit that 50, but we're definitely getting pretty far from that 200. And I look over here at the daily chart and I think, okay, we're getting pretty far, once again, from even just the 50 moving average, and certainly pretty far from the 200 moving average. So two things that I would look at, two things I would keep an eye on here to just say, let's be careful being bullish, all these tech stocks, because they're all ripping like crazy. And I think the future of tech is nothing but up. But I think timing is everything. So if you're thinking about getting bullish, a lot of these tech stocks, just be careful. Just be careful a little bit. They're starting to show some signs and some signals. Let's look at the infamous Google. What do we? I don't think this one has too much. What do we have? So Google's made a nice little pullback. Google's kind of been hitting stuff, and they've been doing pretty well. So Google's, pulling back. We've got a lot of consolidation through there. So that makes me a lot less nervous and concerned about Google being, overextended, right? We had some periods here where Google was getting pretty high. We got up here to 1470 and had a nice little pullback. This is what I want to see Apple do, right? This went a long time without hitting that moving average. And we had these missed levels over here, right? These monthly pivot points. And what did Google do? It ran up here and it gave us a nice little breakout, a nice little run, and broke out and just ran right into that monthly pivot, moving average. And now it's just consolidating. I feel good about whatever Google wants to do now. But there are certainly some pretty extended, pretty intense situations. What's another one that looks like it's made probably a pretty ridiculous run? Tesla, our good friend Elon Musk. I mean, this thing's made a big push here, right? Here we go. We've gone 345 trading, 1-hour candles per trading day. So Tesla hasn't touched the moving average since early April. Got some missed pivots, some targets down here. I'm looking at this thinking, this is feeling pretty overextended. Pretty good amount of space down here between current price and the moving average. Are these going to be things that we need to be watching for and looking for this to kind of make a pullback? Probably. What happened last time? We had a big space right here. Came crashing down. And we had a lot of missed targets, right? Pivot points, pivot points. Google or Tesla made this massive move up, and it just left all these missed levels all over the place. And what happened? It came down real hard, real fast. Well, once again, we're starting to leave a bunch of missed targets here, and we're starting to look at a big space between current price and some of these moving averages. Would I be bullish Tesla right now? Not in a million years. Is it smart to be bearish? I think it's fair, right? Tesla's coming up here to a pretty key landmark level right here, right? $1,000. We're having a little double top at $1,000 here on Tesla. That's going to be a bit of a struggle, right? $1,000, that's going to be a level to look for. We start to see some breakouts on this one. What can we look for? I think we could probably pretty safely look for a call spread, something where maybe we, sell a 9. Tesla moves a ton, right? We sell a 950 call, 975 call, somewhere in that general area, and still make a good, when I'm trading against a trend and I'm really kind of trying to buck the trend and trade some of these stocks on a correction, I'm going to try to have things in my favor as much as possible, right? I want to make sure that I'm at least able to have a 1-to-1 in a worst case scenario, risk to reward. Better case scenario, give me kind of a 2/3 to 1/3 kind of a thing, right? And I want to make sure that I'm still making a little bit more than I'm risking on some of these. So I'm just looking at some of these stocks, finding some signals that are telling us that this has run a long way and that it's ready to start taking a breath. And that number one, if I'm bullish, if I have been bullish, I'm taking profit on all these. If I'm not bullish and I'm wondering which way I should be going, I think shorter term bearish opportunities, 30-day expirations on some of these should be pretty reasonable. But again, we're not going to, number one, sell a naked call on any of this. Number two, buy a put, because there's too much risk on both of those, way too much risk. And we might only get a quick aggressive move down. So 30-day expirations, bearish call spreads. Sell, on Tesla, sell the 975 call, buy the 980 or the 977.50 call, and really limit that risk so that we're not really left, out in the cold if things start to go south on us, or north in this case. Dom had to roll an upper limit on Apple June 19th, Iron Condor from 325, 330 to 350, 345 topside to attempt to salvage a trade. Yeah, we got to do that sometimes. And this is why I'm talking about these being bearish now, is because I'm looking at these numbers and I'm saying now this could be the time that we start to get some of that correction. And that's where I think we're going to have a great opportunity to start selling some call spreads on a couple of these. Tesla, Apple, the Qs. Google's not really on my list, right? Google's kind of been real steady, and I'm pretty sure Google knows the future anyway. I mean, they've kind of got that situation figured out. So I think we're safe on all that stuff. But yeah, I'm looking at Tesla, I'm looking at Apple, I'm looking at the Qs, I'm looking at some of these, and I'm thinking, bearish call spreads, let's see what we can do here. Okay. Does that make sense? What do you guys think about that? Does anybody have any questions, any burning questions where you're thinking, that's crazy talk, or I like it, or I don't like it, or it doesn't make any sense at all, or that makes perfect sense? What do you guys think? How's everyone feeling about that? Good. Okay. Good. Well, I think we've got a couple. We've got a couple fellow Californians in here. A couple of San Diegans as well. Okay, Lenny. Good. Did you guys just read, by the way, California? I just read this, and I sent it to a couple of my California peeps. California is mandatory. They just voted it. I guess, was it today or yesterday? Mandatory to wear masks everywhere. You got to wear a mask in all public places. So mask up, folks. Mask up. Executive order. Yep. So just get that mask on. If you guys have seen any pictures, masks and face shields, yeah, just get a hazmat suit on while you're at it. Go for it. I like it. It's all right. Yeah. I know you're up there in Northern Cal, Lenny. So yeah, it's been on the books for a while. Yeah, Dom. Yep. Here's most recommendations. Bear calls, but yeah, and and I haven't been very bearish this market. I've only taken a bearish trade or two in the last couple of weeks on some of these. We've talked about some of them, but I've taken a couple of bearish trades and they've worked out okay. And I now I'm seeing some real signs that I think there's a few stocks that need to take a breath. But overall, I'm very bullish this market. Very bullish. You like the bandana look? I like it. Masks protect other people. Face shields protect me. Yep, there you go. Mel, tell me you go to Starbucks. Your morning Starbucks run. Do you have a face shield on? I think it's a good look. I think more people need it. Everywhere I go now, there's plastic between me and somebody else. It's man, I feel like the pollution's going to get off the charts. Good. Okay, I love it. So here's what. Here's a couple of things that that I want to be looking at. So a couple of bearish options that I think are decent. We'll keep those in mind. We'll be watching and waiting and looking for a few details there. Oh, I just had a thought and I lost it. What was I thinking about? Calls for, I can't remember now. But anyway, I think these are going to be interesting. I think they're going to be interesting. And remember, one of the best things that I'm looking at for the stock market, again, is talked about this plenty, but I think the Australian dollar versus the Japanese yen is one of the best predictors of the stock market right now. And this is a great indicator, a great signal of what we potentially have coming up here. So I'm just kind of watching these. I'm just kind of keeping an eye on the Aussie dollar, the Aussie yen here, and I'm just saying, all right, if this thing continues to just bust higher, then well, stocks have got a ways to go. But I'm looking at this pivot point move on the Aussie yen, and I think we've got a good opportunity to really kind of start making our way down. And what's going on with my circles here? Making our way down to this area and getting that kind of move. I think there's a real possibility of that, and that's where I'm going to be looking for kind of that short-term correction in the stock market. Is as this Australian dollar Japanese yen starts to make a move for us. I think there's I like it, Peggy. Way to go. It's a good one. I like it. The lost. Oh, Mel, that's probably the problem. I hit 40 last year, and man, it's a lot of brain fog. So, yep. But awesome, Peggy. I love that you sold the Aussie yen. I think it's a great move. I think it's a really good move. Dom, how would you trade XLK in this environment? XLK. This is our tech sector, right? So yeah. So we just want to look at this in the same way as everything else, right? Because I just, sometimes, well, not sometimes, all the time, I can't outthink the market. Cannot ever outthink the market. So I'm just going to look at some of these big open spaces, right? And that doesn't mean you don't have to get bearish everything, right? You don't have to get bearish and trade against the trend. You definitely don't have to do that. But you can say, these are showing signs of extension. And signs of extension tell me that I want to start being careful about, I'm at least going to be neutral. Here. And I know I said in the beginning you can't be neutral, but just stay out. When in doubt, stay out, right? And we're definitely in that area where it's time to have a little bit of doubt about the endless uptrend. And we're seeing these signs and signals here. And again, this could be a one-day move down. Could be one darn day. But that's enough time to, for you to be in a trade and have it hurt a little bit. And so, with some of these nice levels that we have down below and some of these great areas here, I'm all for looking for that pullback. And, again, trade a call spread on it if you feel like taking that risk, or take profit on bullish trades that you have and wait for this thing to dip Wait for all these charts to dip before we start getting bullish once again. All right. That's what I wanted to tell everyone today. Hopefully that answers some questions, gave you guys some thoughts. It's about all I got. I feel like I've been talking all day about trading in the market, mostly because I have been. So I'm gonna leave it at that, and I'll open it up to any questions, comments, thoughts, any stocks you guys want to look at. Every time I say, it's funny, I'll say, let's, give me some stocks you guys want to look at, and I'll either get like 50 stocks or 0. And I'm kind of leaning towards, give me a couple. Let's look at a few of them, and then we'll wrap it up. Lenny, I like Spotify. Me and you have talked about this one. This is a great stock. Spotify did a great job doing nothing for a real long time, right? I traded Spotify a lot in this little lull it was in. Basically 2000, we call the lull 2019. Did nothing in all of 2019, and then it finally broke above these 2019 highs. And then here goes Spotify again, breaking above that area, that consolidation. They've had some big moves. Okay, you were bearish, Spotify. Okay, Dom. So I like this one. This is making a pretty good move. This is kind of making that three. Wow, I can't talk anymore. It's too late. 3-wave run, right? We're getting that kind of a move, consolidation. That kind of a move, and we could see some consolidation and get one more push before this thing starts to pull back and starts to give us a little bit of a retracement there. So yeah, I like Spotify. These guys are, finally taking out their all-time highs, which were back here at 198, and that, was set in place in mid-2018. They struggled a little bit at those all-time highs, this kind of, $200-ish mark, and then they just blasted through it, made a nice little run. So do I want to be getting into Spotify right now? Heck no. It's too late now. Don't try to get in right now. This is one of those stocks where you say, don't try to get bullish and jump on the bandwagon. Don't try to say you found the top either and say if we can trade this down, because it's not ready for either of those. Spotify is a stay out and wait for the moment and look for some more consolidation, and let's trade the break. Right? My arrow's all messed up, but that's all right. You guys get the point. Let's get that consolidation, and let's trade the heck out of a break right here. Let's get this thing going, and away we go. That's what I would love to see. That's what I want to do with Spotify. So one more consolidation and another push higher, and then from there they're going to be pretty extended, and they're probably going to have more consolidation, and they may be ready for some correction at that point as well. So that's what I look for. Okay, one more stock. Give me one more stock, guys, and we'll wrap it up. Unless nobody has one more stock, and I will happily bid you adieu. But anybody have one more stock they want to look at? Amy, Roku. How you doing, Amy? Good to see you. Roku. I love Roku. These guys love to not stop going higher. Roku's a great one. So I love this one. I think this is a great stock. Roku's kind of got this, this channel, and I'm definitely a little bit curious to see kind of what happens with this area here, right? We've kind of got this little zone that Roku has been in for so long. I think that they're ripe for a nice little breakout and a continuation higher. I love Roku for the bullishness that it is hopefully ready to give us. So, the majority of the movement here, we've kind of had two channels on this and or two parts to our bigger channel. Roku looks really, really good for, that kind of a push. I think these guys are ripe and ready for a big move up there. So I would say, buy a long-term option, get a, 30 to 45-day bullish put spread, any and all of the above. I like Roku higher. We had a little short-term kind of rounded bottom right here, nice pullback, took out that neckline right there, and away these guys go. So they've got to get above some of this mumbo jumbo right here. But yeah, I like Roku. I think this has some really good potential to continue that trend and really get this thing going. Peggy, I'll look at CN in 1 second. Dom, would you create a wedge from the low of March? You could. I'm more interested kind of in this channel right here since it lines up so well. But you could create a little bit of a triangle right there. So yeah, and if it does start to break lower, let it rip. But Roku just always goes higher for whatever reason. These guys just go higher. So let's ride that trend. Peggy, CN, it's the last one we'll look at, and then I'll let you guys go. CN is looking good, but it looks like we're trading around some all-time highs. I don't love trading around all-time highs, right? So, oh, never mind. Never mind. What are these guys? Oh, yeah. So I take it back. All-time highs are way the heck over here, but that's also 20 years ago. So of the last 20 years, 19 years plus, they're just busting through these recent highs, and they're kind of in this, in this zone here. So, I look at something like this, and again, when we look at just kind of, what kind of space are we talking about? What kind of area do we have to work with? This is in the process of pulling back. I think this is a decent area to kind of fill in some of these spaces and then start buying some dips. I wouldn't be bearish these guys at all. I don't see any, real bearish movement here, but buying some dips, I like. But I'd like to see, let's see these guys drop 10, 15%, and then start looking at some of that. Okay, guys, that's it for me. Thanks for being on as always. Lovely to see you folks. I hope everyone's having a wonderful day and a great week. And take care of yourselves. We'll catch you guys back here next Thursday for the webinar. But hopefully that's helpful. Hopefully it makes sense for everybody. You can see some of these setups and movements. Thanks for being on, everybody. Take care, guys. And good luck with everything. We'll see you all later. I'll get this recording posted pretty quick. Thanks, guys.